Thanks for downloading this episode of the Blockchain Report on Resilient Advisor. Joining me, as always, is Dan Weiskopf, portfolio manager at Toroso Investments. Dan, thanks for coming back on. Let's get right into it. So I noticed in your most recent blockchain report, 3 holdings that are very well-known names, but that speak to the blockchain space. And I wonder if you could walk us through the investment thesis. Tell us about your largest holding as of the end of the second quarter, IBM.
Yeah, people don't necessarily realize how important IBM is in this space. And as a stock, it's yielding over 5%. So at the end of the day, what they're doing is effectively the plumbing, right? Somebody's got to be creating the blockchain as an application, and that's what they're doing. Accenture does it too, right? They're very focused on the blockchain, and candidly, I think they're also working with Walmart as an example. When you've got big clients like a Walmart, you can make good money.
Yeah, Accenture was another name that stood out to me, and I now see how they do fit into this space. But tell me, how does Overstock fit into the space?
Oh, Overstock is at the center of the space, and we will be finding out very soon how important it is. Listen, it's a venture capital allocation for us because of T0, right? In the case of T0, which is a big position for them, they've been talking about, settlement times being real time, right? But I think we're in for some positive surprises out of Overstock, which is going to be reporting numbers very soon. But it isn't necessarily going to be the numbers that are the surprise. It's what's going to be coming out of the venture capital side.
So Dan, one more name I'd love to get your thoughts on are Silvergate. Where do you see them in the space?
Wow. In the case of Silvergate, when we first got involved in Silvergate, we bought it as a bank below book value. When it was like $14, $15, and it was just ridiculously cheap, and is at the core of the blockchain. People forget that crypto needs infrastructure, and Silvergate is at the core of the infrastructure in terms of trading, and a bank that is familiar with where all that trading is happening.
So Dan, we're recording this in July. In June, the price of Bitcoin was down 40% alone. That led to some carnage in some names, including names that have been part of your ecosphere for a while. So what do viewers and listeners need to know about the Voyager Digital story?
Yeah, Voyager Digital, listen, my dad used to say the market will make you humble. And Voyager made me humble, as you would expect. At the end of the day, we only had a 30 basis point position on it when it went into bankruptcy. The mistake that the company made was having too much exposure allocated to a hedge fund that they were loaning the crypto to. $650 million they loaned to that hedge fund, 3 arrows out of 2 billion. You know what? I talked to management 3 weeks prior to the announcement and asked him a whole bunch of detailed questions about Celsius and about derivative exposure, and thought it was clean based on my conversation. And unfortunately, that wasn't the case.
Dan, that really speaks to the importance of active management inside of this space. You cannot just buy and hold, much like you cannot buy and hold in the late 90s if you were investing in the internet stock space and have a good outcome through a market crisis. So let's pivot for a second, Dan, to mining. Now, you had mentioned in your most recent blockchain report, which, by the way, can be downloaded by visiting blocketf.com. That's blocketf.com. You mentioned reducing some of the exposure to mining, but how mining is the backbone of the blockchain space. But in there, you talked about something that I had never heard of before, and that's this new technological innovation called immersion. Dan, what is immersion?
So immersion is, it's very hard to understand this because it's the equivalent of how come airplanes actually stay up in the air, right? You're putting technology chips into water cooling a system, right? So that they can work more efficiently and mine more Bitcoin. To me, that makes no sense. I have to admit that. But having been to a number of facilities, including Argos, as well as Riots, you can see how if it's working in a cooler way, and by the way, quieter way, you can't even hear these things when they're operating. You can understand that you might get like 20% more Bitcoin as a result of it. It might get higher numbers than that, but as long as the equipment is working more efficiently, it's better for the operator.
So Dan, let's wrap up with your thoughts and outlook on this space for the second half of the year. So we're recording this in July of 2022. What do you think investors and financial advisors who allocate to the space need to pay attention to for the rest of the year?
Listen, at the end of the day, if Bitcoin holds the $20,000 mark, which I think it has, well, that might be the bottom. And when I'm looking at the miners, I'm looking at them in the context, what's gone wrong for the miners, right? The price action's gone horribly wrong for them. Some miners in Texas have been literally shut down, right, because of energy, right? And then their cost of capital has gone up. It's three things that are creating challenges, right? And all the headlines around, the platforms have been really kind of scary. These are times where bottoms are made. I hope that 20,000 was the bottom. If it is, we'll gradually, I think, go higher. A grind is not necessarily exciting. It doesn't make for wonderful headlines, but I think what people may find is that all of a sudden we're at 30,000. And at 30,000, people get excited again. And grinds aren't exciting, but then all of a sudden you look backwards and you say, oh shit, I should have bought.
Awesome. Dan, thanks so much for coming back on this month. To download and subscribe to Dan's report, please visit blocketf.com. That is blocketf.com.
Thanks, Jay. Be well.